Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Howdy friends, there's going to be a lot more robe life as we approach fall and winter. So the market today gave us what we expected as far as the most likely scenario. Looking at the 4-hour time frame for SPY, we've been watching this equilibrium now. It's playing out nicely. We have our high of the bull move, low of the pullback, lower high, higher low, and we're scouting for a lower high compared to 289.95. That's the most important resistance level. I personally made an entry today as a bit of a hedge. I was playing a CGC marijuana sector oversold bounce, which is correlated to the S&P 500 enough that if we were going to form a lower high today on the 4-hour time frame, I wanted to protect against that pullback. So I did try a top fishing play on SPY, got stopped out for a small loss, but I wouldn't be surprised to see that play follow through into tomorrow. So 289.95 is the level. If we do not break that level tomorrow, we're going to look for a pullback and a higher low compared to 285.25 and the tightening range that we're looking for to head into Friday pretty much. It might not even break Friday. We'll see where we get after tomorrow. But what turned everything around today and what some observations were, and at the end of this video, I attached 15 minutes of the morning live stream right when the bell rang to the first 15 minutes of the day, just so you can see what I was seeing and saying live. But for SPY on the 5-minute time frame, you could tell right at the open something was up as far as something's about to happen because of, for me, it's just the numbers flashing. As simple and silly as that sounds, when the numbers of SPY are going really rapid, it just tells me there's a lot of volume and there's a lot of price action, or a lot of volume and a lot of shares going back and forth. So as soon as I saw that happen, I got ready and said, okay, we're either heading down to test that 283 must hold support or something's up here. And we pulled back, and really what it was is XLF. XLF was the key to the morning because QQQ broke its low of yesterday and dropped down, and SPY broke its low of yesterday and dropped down. And I said, okay, if we're going to break 283, we have to see SPY with significant bear volume in the first hour of trading if that's going to happen. XLF saved the day. XLF low of yesterday, which we'll look at here in just a second, was 25.03. It hit the low of the day, 25.03, and we bounced off of it. And I said, okay, if we do not break the low of the day and the low of yesterday on XLF, the SPY bears aren't going much further. So there's no chance we're breaking 283 if XLF does not break the low of yesterday. From there, we moved up a little bit, and then a news flash came out that the algos reacted to, and it was something about Trump confirming tariffs were going to go through, something, who cares, a news flash that caused another little quick move. It led to QQQ quick dump to the low of the day, SPY quick dump to the low of the day, XLF from about 25.09 instantly to 25.03, held that triple bottom, and then shot right back up towards the high of the day again. That told me as long as that low holds, we're looking for that 4-hour higher low. And of course, the bulls with huge follow through all morning. Right about here is where I top fished when we lost. This was a bit of a 5-minute rising wedge. Lost a 2-minute uptrend was my entry for the bears. Put my stop loss above the high of the day, and I got stopped out at the end of the day from that position. Again, very small loss, just being a bit protective of another position, a bit of a hedge. So big picture, 4-hour time frame, all about 289.95. How this 4-hour breaks is going to significantly impact the percentage odds of whether we get a bull break or whether we get a bear break. For me, it's a 50-50 right now. There's no reason for me to try and pick direction. We're in the middle of this range. And if, however we break this 4-hour equilibrium, I'd say that would then shift things maybe 70-30 into whichever direction the break occurs. So it is important going forward. Looking at IWM, it saw a bounce as well, but it's not making progress as far as changing resistance or breaking resistance. The 4-hour time frame, as opposed to being in equilibrium, is in a downtrend, lower highs, lower lows. So 148.12 resistance, the high of today, just a lower high, 147.39, and it's up to the bulls to hold the low of today and then break these resistances to shift that momentum. I don't always use the 4-hour time frame for stocks, but where we stand in the markets right now, it's just a bit of clarity for me, as the daily chart may look a little bit choppy. QQQ, so 4-hour equilibrium is very valid here as well, just like SPY. 186.42 is the resistance level to be watching tomorrow. So let's just say, rough example, tomorrow, S&P 500 starts strong thanks to the financial sector strength, and we're up at we break 290 and we break that resistance, the 4-hour resistance. If I see SPY break that 4-hour resistance and QQQ does not break 186.42, that's information that I can use. And I can say SPY bulls are not going much further without QQQ breaking that resistance level. So it's almost like it keeps me from fake outs. If you saw the first 5 minutes of trading on SPY today, you'd say, oh no, bears are in full control. When of course we rocket shipped with a V-shaped recovery, and it was XLF holding support that let us know not to be believing the bears on their downside move first thing. So XLF, let's just look at that on the 2-minute time frame. It might even have to go to the 1 minute with how fast things were going. It always is like time slows down. It seems like this took place over 15 minutes this morning, when in reality, it was probably over 10 minutes. So I'm going down to the 1 minute time frame. And it's going to take me a while to get back there. But I just wanted you to see the double bottoms and the speed at which these levels were hit. And then how quickly that momentum shift said, all right, bulls are safe. And yeah, it was really just a couple minutes. So low of the day, 26.03, which was the low of yesterday. Here's where that tweet, the algos reacted to whatever it was, dumped down, held that level, V-shaped rocket, and then from there we just needed a new high of the day. And that took a while. Look how many times we hit 26.11. Hit it, hit it, hit it. 5 rejections, 26.10. There's your break all the way at 9.44. Oh man, this is the 1 second chart. That's why it took so long for me to find. So that was literally, that couldn't have been only 5 seconds. Anyways, you get the idea. XLV, 4-hour time frame, just a lower high, lower low pattern. Actually, I take that back. Jump the gun. XLV is in an equilibrium. We have our low of 88.32, our high of 90.55, higher low of 88.72, and we're watching for a lower high. I'm disregarding this wick. That happened in extended hours. We're watching for a lower high compared to 90.55. And if we get it, tightening range into Friday or Monday. XBI, same thing, 4-hour downtrend. Bulls have to see the higher low, break resistances. Otherwise, we're going to look for that tightening range to continue in the S&P 500. Again, we can get clues from every piece of the puzzle. Most important piece of the puzzle is QQQ, then XLF, then XLV as far as weight in the S&P 500. VIX pulling back today, heading down towards 1850. Key short-term level. Again, just looking at this move this week as a lower high compared to the previous moves. So the bulls have to change that, and I know there's no bulls and bears. Someone always comments and doesn't like how I refer to the VIX as if it were a stock, but a chart is a chart is a chart, as far as I'm concerned, and the language used to describe them is universal. So 1850, 1550 supports, and really I don't even care what the VIX does. It's just the S&P 500. The VIX is going to go up if the S&P 500 breaks its range bearish, and the VIX is going to go down if it breaks it bullish. It's pretty much as simple as that. Gold. So gold on the 4-hour time frame is what I'm watching as the most important because its higher lows are pretty close to breaking bearish. Have to be a bit cautious. Last higher low was 1531, and as long as that holds, bulls keep the uptrend. If we lose 1531, we're looking back at 1525, and daily consolidation to try and form a higher low compared to 1492 will be underway. If we were to start the morning tomorrow with these 4-hour uptrends intact and still very tight trading, there's a potential play to be watching the bear miners for a short-term day trade if these 4-hour higher lows are lost. Silver is still way stronger than gold, but also slowing down a little bit. Sideways trading. Short-term support is 1815. Again, lose the 4-hour uptrends, just looking for a daily higher low to form, but that is a short-term opportunity for the bear miners to see some short-term upside. Oil inventory report. So a lower high forming on the daily time frame compared to 57.11. As I pointed out in recent videos, if you're looking for a bear break of the weekly equilibrium, and you think that's going to happen, you're looking for a bearish entry on a daily lower high. We don't have a firm rejection just yet. If we break 55.32, the low of today, it'll be a very clear lower high set compared to that level. And just watching the weekly range for me personally. Want to wait for a break there. Natural gas. So natural gas had a bull break today, but gave most of it back. And it was a setup where this morning I looked at this pre-market. I said, okay, we got the 4-hour pullback I talked about yesterday that I wanted. And then I looked at the hourly chart. And I said, oh man, that's an hourly bull flag. I want an entry. So I literally pulled up an options order for UNG. I was going to buy calls first thing this morning. And so I went about my morning routine. And then I pulled up, and when I do the morning live stream, I go over all the sectors and the commodities. And I pulled up this chart, got to natural gas, doing my rundown, and it was 224, 225. I said, man, that's the move I wanted. So the move happened without me. Hourly bull flag confirmed. 4-hour resistance levels broke. Nice follow through for UNG. And instantly, I lost interest for the day. And a lot of people in that scenario are going to say, they're going to either try and chase the trade and get in first thing, or just be scouting. Where can I get my bull entry all day? For me, it's just so simple. When there's so many things to trade in this market, so many sectors, so many stocks, so many commodities, if you miss the trade, go find the next one. So for me, the trade setup I wanted was an entry with a stop under the low. I don't know how tight I would have made it, but under the low of consolidation, looking for an hourly bull flag. So if the hourly bull flag that I'm looking for takes place and I'm not in the trade, that's it, game over. I leave that trade. It's no longer the trade that I'm looking for. So we ended up pulling all the way back. Any entry that I would have made today for the bulls, I would have lost money on. So still keeping an eye on it, but this is not the follow-through breakout the bulls were looking for just yet. We'll see if they can keep the 4-hour time frame strong. But again, keeping an eye on natural gas. Do not sleep on natural gas over the next couple of months. I don't know if we're going to get a bull break, but the setup is there, and we very easily could. And I think it's more likely than not. So I'm absolutely biding my time and trying to pick a position with the full awareness that we may just set a weekly lower high. Anything under 250 is continued weekly downtrend. And as I've said in the past, my ideal scenario is reject from 250, form a weekly higher low into mid-September, bull break late September. That's what I would like to see as far as easiest entry for my comfort level. So that's where we stand in the market overall. 4-hour time frame's a great guide. Hope you're doing good things out there. We'll check back in tomorrow. We'll end it here with some Iceland and then cap it off with the replay of the first 15 minutes of the live stream that I do daily with some help from some other fine chart guys and gals with their streams. Hey everyone, checking in. What is today? Wednesday, August 28th, 9 a.m. Eastern. We got the oil inventory report today, 10:30 a.m. So we have a bit of a weaker open. We're going to test the low of yesterday on SPY. Pretty much first thing it looks like if we don't gap down open, which is still a possibility, a small gap down open. So what I'm going to continue to be watching is the 4-hour time frame on SPY, which has the most clarity for me personally, especially after yesterday's action. So here it is on the 4-hour time frame. We have our high of Friday before the dump, the low of the Friday dump, a lower high was set yesterday, and now we're looking for a higher low. So the most important level for me is 283. That level is a must hold in the short term for the bulls. And as I've said, if we are going to break that level, in my opinion, it's going to have to be accompanied by a significant amount of bear volume today. So if we see XLF and QQQ breaking below the lows of yesterday, having high bear volume, SPY having high bear volume, it's definitely a possibility to break that level. But absent high bear volume, the odds favor holding it and staying in this 4-hour tightening range at least until tomorrow or Friday. So we need to see an hourly trend change, or at least a 15-minute trend change. If we change the 15-minute trend to the bulls, that's the first indication that our 4-hour higher low has been set. If we wait for the hourly trend to change, as the hourly trend is currently clearly in a downtrend, with our lower high, the bounce yesterday afternoon, and now dropping to a lower low pre-market, if we change the hourly trend, it's an even bigger indication that our 4-hour higher low has formed. So I'm going to be watching the 15-minute today for the first potential clue, but knowing that the hourly time frame has to see it as well for the follow-through. So for me personally, that's the key level I'm going to be watching, and I'm only going to be looking bearish if there is significant volume today. So just looking at yesterday, comparatively, the first hour of trading, that's going to be a bit of a benchmark. So yesterday's first hour of trading, total volume was 9 million on SPY. Back last, let's see, today's Wednesday, so back on Friday, the first hour, it was 15 million. Monday, 13, 14 million. So pretty much if we don't see 12 plus million, I'd say, then that's not impressive bear volume. Checking in on the dollar, the bulls are in control here. Looking at the daily time frame, we had the big pullback. So high, low, lower high, higher low. If we can't break 98.45, it's just another lower high, and we'll have this month-long equilibrium continuing to play out. So key resistance approaching. Anybody that's bullish gold or miners wants to see a lower high and an eventual bear break of this equilibrium. So 98.45 is a key resistance level approaching for the dollar. Gold is still in full control of the bulls. I'm watching the 4-hour uptrend as the most important. And right now, 1532, 1531 is now our 4-hour higher low. If that level breaks, the odds of daily consolidation coming will increase significantly. So 4-hour trend on gold. Silver continues to blow gold out of the water in the short term as far as strength goes. And the bulls are going to have to hold 1804 to keep the 4-hour uptrend on silver. So 4-hour time frame for precious metals that have to hold the 4-hour uptrend to keep full control. Oil is seeing a little bit of strength, which is interesting because oil is breaking correlation with the S&P 500 this morning as SPY dropped to a lower low and oil clearly has not yet. If we see a bearish reaction to oil and the inventory report, it'll be just a daily lower high compared to 57.11, and we'll look to pull back from that. So 57.11 is a potential top fishing play for bears. The only trades aside from day trades in oil are those looking to position themselves for the potential and inevitable break of this equilibrium. But obviously there's a bit of guessing involved as to which direction we're going to break. If you feel the market, the S&P 500 is going to break the August low and see further weakness, the odds that SPY breaks $50, or I should say the odds that oil breaks $50 will increase very significantly. So if I'm sitting here saying, I think the August lows are going to break on SPY, I think fear is going to spike in this market, then I want to be looking for a bearish entry on oil with a lower high compared to 57.11 while we are still within this equilibrium. Because that equilibrium support is over 10% away, and obviously that's a lot less risk and a lot less reward if I were to wait for that level. But if I'm wanting to be a bit more aggressive, that's what I'm looking at, a potential bearish entry on the daily with 57.11. Natural gas, oh man. I was about to buy calls this morning first thing. The hourly bull flag just confirmed. This is the time to be watching natural gas. I've been poking at it and, putting it out there the last month plus, but it's getting real close to a shift. The 4-hour trend just changed for the bulls. The daily time frame is breaking lower high resistances, and the weekly chart, we're watching this falling wedge, still a weekly lower high, anything under 250, but watch for this shift in natural gas. The miners in gold have been a whole lot of fun, and I can't stress enough how I feel that natural gas is going to come to the forefront of volatility as we head into September.